Hello, YouTube family, and welcome to my first live stream. And in today's live stream, we have two special guests. I have David Rose, Jamaica Observer, business writer, and recent Prime Minister Youth Awardee. And I have Ruan Francis, young CEO and investor, CEO of Vasca Incorporation, and a recent grad of the University of West Indies in econ and accounts. So, David, I want to ask you the first question of our life tonight. When did you start invest?
Once you have the funds to open the account, to be honest.
Okay, as in your personal journey, when did you start your
August 2016.
2016, and how has it been so far from that time?
It's been a pretty rewarding and interesting journey, between a growth in capital, meaning money, and also at the same time, the network that you build from investing.
Yeah.
Because when you go to these shareholder meetings, you, along with, the different social medium to discuss finance, you start to build a bigger network.
Okay. So, Ruan, when did you start your investing journey? Just to share with our audience tonight.
Well, I started very young, I started when I was 18. I would call it very young because I was just introduced to it. But I always been interested in it. Just never have the capital at the moment to invest. So when I initially started, it was a flywheel for me. I continue, I never stopped. Investing actually take me to university. So it's what paid my school fee and helped me along the way.
Okay, so Ruan, how do you think new investors should approach investing? How do you think they should?
I think if you're entering the market now, you're riding on a wave of low historical interest rate for the last 200 years. So you'll be see stock going out the roof. You will be seeing a lot of crazy things going on in the market that can distort your views. You can even enter at the late period of a cycle. But what I would say that develop a sound intellectual framework that has worked over the long run. Look for persons in the investment field that has been doing well
Yeah.
with track record and then follow them, replicate them. Don't change the model.
Okay. David, anything you'll add to that? Your
The reality,
audience.
the reality is to also understand your market, because the Jamaican market is a lot different from the US and other foreign markets. So, for example, in the US markets, it's open from 8:30, I believe, all the way, sorry, 9:30 all the way to 4 o'clock in the afternoon. And there's after hours trading. You have different financial options. So you have options, for example, futures and so on. But in Jamaica, it's between 9:30 to 1. You have to consider the liquidity constraints and so forth. So that are just some of the key things that you should understand: the basics of your market and what can be limiting your potential growth in capital.
Okay. So you think that there are more opportunities in the US market?
There are a lot more opportunities because of the larger array of securities. You have hundreds of thousands of securities. Actually, not hundreds of thousands, but you have thousands of securities on the US market,
Yeah.
Canadian market, and so forth. The little person is making 1,000% or 100% every day between penny stocks, OTC stocks, the regular stocks, and even, for example, options. So there's a lot more opportunity on those markets.
Okay. So all right. What I notice what I notice a lot of the time when new investors come to me, they come with a lot of sentimental pressure. So, for example, a person asked me the other night if IPO is better than buying stock. So I was wondering if there's something with IPO, that the marketing of IPO on the Jamaican market, that is giving a buzz. Well, what do you think, David, about that? in light of the recent IPOs?
No, so the thing is, you have to think about it in a context, in the sense that in the context of an IPO, the way it's usually done nowadays, to be honest, is whereby you have a very small pool of shares to buy from. The price itself, from a nominal standpoint, becomes attractive to many new investors versus the business model. So, a lot of persons, say they want to invest in IPOs. Works for some, doesn't always work every time, but that's just the reality, in the sense that persons are saying I can get, for example, 10,000 shares of IPO at $1 versus, call it what? 100 shares of Grace Kennedy at $100.
Yeah.
So that's just really it, because I even talked to someone recently and she said that if I got into the IPO that closed yesterday, JP, and I said no. And she was like, she went in just because she missed on spur tree and she didn't want to miss out on this opportunity. So, that's just really it. So in the sense that new investors are looking at the sentiment surrounding IPOs because, for example, your persons that have bought a spur tree, $3, sold it now at sorry, it's about a $1, which is IPO price. So it's at $3 right now, and say 200% in the pocket. The other persons would have said about Fisco for 80 cents, $1, sell it for $55. So it's the mental concept of growth, basically. So it's easier for something to go from $1 to $2 than it is for something to go from 13 to 26, or even another scenario.
Okay. So, all right, Fisco now. Looking at Fisco the other night. Fisco is trading at around $3.
It's around $4.90 as of today.
490. All right. So based on what I was seeing, the PE ratio is about 50 right now. You think it is overvalued by far? Or do you think it's overvalued?
Well, to be honest, in this market, the PE don't matter anymore. Like, you tell you just sentiment. Because, to be honest, from a realistic standpoint, the business still has a lot of ground to catch up on. The tax break does give them some relief in the short term, and with the additional capital. But the thing is, Fesco, in my opinion, should remain at a relatively low price. But the thing is, the market sells what it wants. Because at the end of the day, if there's PE matter, the stock goes up, which is what many persons say. Those fundamentals matter, the stock is going up.
Well, what I'm saying, I understand that the company is a good company, a good Jamaican company. I see it as a good company, but the valuation, to me, I don't know if it's just me. Ron, you want to add anything to that?
First and foremost, I don't think I would ever buy a company like Fesco for 50 times earnings. Because I'm a value investor and that type of valuation doesn't make any rational sense to me. I go for companies that return high return on tangible assets that are selling below intrinsic value or close to intrinsic value. 50 times earnings, come on. What's the replacement value for the asset? So I can't tell if Fesco is actually a value play for me. So
all right, then, Ron.
Hold on, I must put it to this, Last time, historically, when you see stocks selling 50 times earnings, it can cause investors a lot of money. Like when Microsoft was selling 50 times, 60 times earnings, it took 10 years for investors to recuperate that amount. So I guess investors have to think about permanent impairment of capital or opportunity costs.
So, all right, that's another one. Because I see CPG, another company that was trading at 100 times. That's even worse. But how would you describe your investment philosophy, Rowan? Can you say you're a value investor?
So for me right now, personally, I invest in companies that return high amount of capital and equity, high amount of capital and return on invested capital or funds employed. Hold on, let me go a little further. That's just a metric part of it. So I like companies that are selling below intrinsic value. Secondly, When it comes on to actually valuing stocks, there are a myriad of things I have to consider qualitatively wise. But when it comes to intrinsic value, first and foremost, even if you're buying, for instance, if it's a
Wait,
startup,
first,
hold
what
on.
is intrinsic value for the newbies, person who don't know?
What is value?
Intrinsic value.
So intrinsic value is the amount of capital you can retain from that business over a period of time, whether it's 100 years from now, 10 years from now, or 5 years from now. You project those cash flow out depending on your growth rate for the companies. For me, I normally just use like a 5% and discount it back using a different metrics. Whether you want to use a 10-year treasury bond, you want to add the beta, the capping model to it to discount back that amount. But it's really the amount of cash you can get back from the business. Because axiomatically, investment is laying out capital now for future projected return of cash flow. That's basically it.
Okay. All right. So persons in the chat, you can leave a question if you want, and we'll get back to them near to the end of the live. So David, what is your investment philosophy?
To be honest, my investment philosophy comes down to remember what your original goal or desire is. So for me, it's about improving capital and also, looking at how best I can future-proof my cash. So that means, if I'm going to invest, I should be able to sleep at night. No, that's a serious thing because persons would buy a stock and say, boy, I hope it goes up. And when the results go differently, and let's say you see the results coming on a Friday after hours, and Monday morning to come in to actually see if we can get the exit. Like, I don't like that. I shouldn't be quote unquote saying to myself, why? Did they stop? How am I going to get out? It's working, Jano. Can I get in? No, it should be come to what you buy. And it shouldn't just be, I buy this stock because it's cheap from a nominal price perspective, because end of the day, any stock can go from pennies to thousands. And that's just a fact. And even if you have for stocks and so on, the value will still be higher. So my philosophy is, look at the companies that, you can actually understand. Now, so you should have a PhD in finance or able to understand, how this company does this or that. No, it's going from a simple layman's perspective. What does a company do? And then you get a little bit more deeper into that in terms of, understanding what goal do you want from the stock. Is that you want this company to return to you, for example, a 5% dividend yield, but at the sacrifice of capital of the company's growth, the continuous redeployment of cash to investors, or that you'd want a company which is growing its dividend each year, for example, at a year to probably 10%, while reinvesting a significant capital back into the business.
Yeah.
And understanding, the fundamental economics or the environment works for your portfolio, because people are going to say, why you should only go with stocks, bonds, or whatever race, and it makes no sense. And the thing is, the stock market has made a lot of persons rich, and it has made a lot of persons poor. Bill Huang lost $20 billion in 2 days, and you have Zuckerberg clearing off a couple of $20 billion in 1 day, or Meta's most recent performance. And that's just it. Your philosophy, my philosophy really comes down to understanding what I want, what targets I want to achieve, and also what I've come with. Does it make sense? I said to go to sleep, and I've been nightmares about if the stock is going to go down, how am I going to get out?
Okay. All right, then fair enough. So David, how can Caribbean investors like gain access to the US market? Because that's a common question I've got. I didn't do any video on it, but could you?
All right, so I'm well versed on this topic. I took my consultancy on this, but all right. So you can actually, there are two main routes. You can go through one of the local brokers here in Jamaica, like a Proven Wealth, a VM Wealth, Surgical Investments, Sterling Asset Management, a Portfolio Services Limited. There are a couple of brokers out here that offer that service, but the thing is, it's a steep premium. So the commission per trade is sometimes, probably 2% of the value of the trade, or let's just say $10 or $50 commission flat fee. And a lot of the brokers might say, you need to have at least 2,000, 5,000 US dollars in order to actually invest in US market through that route.
Yeah.
The other route is, go through.
Yeah, you continue.
I was going to say the other route is open an account with a broker that is licensed in the USA or in those foreign markets. However, the thing is that not all of the brokers give the option or the ability for persons who don't have an SSN or citizenship to open an account. So before October 2020, there were 3 brokers that I know immediately that you could have opened an account with without issue. And these were TD Ameritrade, Interactive Brokers, and Zaxtrade. After October 2020, TD Ameritrade is no longer taking Jamaicans as new clients.
So why TD Ameritrade is not taking any more Jamaicans?
I did an article on this, but they were saying that it's based on a new jurisdictional policy. And I think this is also influenced by the country's current FATF situation. And for what FATF means, Financial Action Task Force, that's all it means in simplified terms, CTF. As we continue to take steps towards our future as a combined company, TD Ameritrade has implemented some changes in order to align to Schwab's international jurisdictional policy. As a result, we'll no longer open new client accounts in Jamaica. However, existing clients reside in Jamaica may keep their accounts and open additional accounts in the future.
Okay.
So that's context right there. So I want a person to say, hey, just open your accounts. It isn't costing you any money. You understand? Some persons must be advice are pretty happy now because they're like, Jano, are pretty happy because some of them, are better with them this year, no commission offered by TD and I'm merging accounts with them. And then other persons who didn't get that onto that opportunity are now having to go forward and actually open accounts with interactive brokers. However, interactive broker is a 0.5% commission per trade. So versus TD, where actually were able to get, no commission charges, you're paying commission with interactive brokers. The one advantage interactive brokers had over TD was they could buy fractional shares in interactive brokers. The interactive broker is still taking clients from Jamaica, so that's an option for persons. And also going to point out was you also have Zaxtrade. Zaxtrade allows you to Jamaican to open accounts with them, but the caveat is that you have to have at least $2,000 US to open an account with them. Whereas with TD and interactive brokers, it would just any amount of money you could open the account with. You understand? So hope that gives some context as to what you're asking.
So I opened a TD Ameritrade last year early. So it seemed like I catch the boat, but it's quite unfortunate. But guys, you can always use TD interactive brokers if you want to gain access to US stocks or Canadian stocks also, right, David?
Not just Canadian stocks. So Interactive Brokers is based in the UK and they're a global brokerage firm. So you can invest in Canada, UK, France, Europe, India, Hong Kong. You can invest across the world with just one broker. So open multiple accounts across the world.
Okay. So we could share a link in the bio, if anything.
Sure, I'll send it in the chat right now.
Yes. Rowan, exactly. So
Yes,
the other day you saw Facebook stock and I think the revenue was up and the earnings were down like 5%, but the stock fell more than 30%. Do you think the market overreact? And what can new investors learn from this?
When you think about those big moves in stocks, it's very important to take a first principle approach to the market. Because sometimes it's really pension fund or institutional investors who have certain investment criteria because the market was pulling out whatever their investment premises are, they had to pull out the stock first and foremost. And I also believe that most investors are actually behaving over pessimistic to Facebook. And that's because of the new iOS policies in regard to how data is shared across mobile devices. If you understand, first and foremost, if you understand network effects upon a basic premise, You understand artificial intelligence. Artificial intelligence doesn't need external data to actually predict certain advertising content. And that's because the new TikTok have shown that they don't really need much external data. All they need is how many times you react with a post, what you like, and what your browsing history is like. And they're able to provide you with content. So I believe, and first, I believe that they are really overreacting to the iOS new update. Secondly, Android is still one of the largest market. And even though iOS come out with a new update, I don't see anywhere where iOS has done that as yet. Thirdly, I just want to cut out a third because there are many different criteria I'm looking at for Facebook. But we have WhatsApp. WhatsApp have a brilliant switching cost. It has a brilliant network effect, scalability, 2 billion people. If Facebook only charged $99 for adults who represent approximately 89% of the WhatsApp platform, they're able to make approximately $160 billion pre-tax. So I'm thinking investors are really overreacting to the viability and growth of Facebook. And if Facebook is able to leverage both their WhatsApp, their Facebook, and Instagram ecosystem for the metaverse, I see a very, very, very bright future for Facebook. I'm not pessimistic at Facebook at all. At 15-time earnings, I will put approximately 3% of my portfolio in it, just to hold it for the long run.
And now that you said that, guys, disclaimer here, we're not licensed financial advisors. So, because each investor is different, each investor has a different profile. So what might suit me might not suit Ruan, and what suit me might not suit David. So talk to your licensed financial advisor, please.
Yeah, thank you, Lance.
Yeah. So, but we can share opinion just the same. David, if someone gave you $100 million and say invest in only 5 companies, which 5 companies would you pick right now?
You're talking about for the short term or for the long term, because you have to remember Jamaicans have different tastes.
Oh, Jamaica.
No, so if you're talking about companies just locally, for one, NCB Financial Group for one, because you're talking about a company which it can extract from Jamaica's DNA. Like, if you try to extract Jamaica's DNA, the country just falls on its face. That's literally just the facts of it. I don't need a PhD or whatever to try and figure out, about which stock I need to get. And then, the next company I'll be looking at is, especially on the junior market side, is, like Lasco Manufacturing. And that's just because as a manufacturer that, hasn't really tapped into the export market in that sense, at the same time, still having that growth potential. I mean, this continuous strong cash flow growth and maintaining its gross margins as a business that can truly respect. The next company that I can think of on the top of my head is Wasinco. And Wasinco, you literally cannot skip past anywhere in Jamaica and that kind of Wasinco product within your reach. Like literally you cannot avoid, which kind of shows you the reach and scale of the business. Then Grace Kennedy, especially they're considering to list on International Stock Exchange this year, which shows that the company has a lot more ambitious plans for the next quote unquote 10 plus years based on what they're saying at their recent 100th anniversary. And the next company I look at really and truly is probably like a CPJ, to be honest, as one of the other junior market picks, and that just based on the company's turnaround and real ambitious plans to deepen its penetration in the different retail and hospitality markets that's in Jamaica but overseas. Your mic is mute.
Sorry. Those are actually good companies. I might not choose all, but they are good companies. I can assure you that. Ruan, do you want to share your top 5?
Yeah, so since David almost eclipsed all my interest in the junior market, David, you didn't mention NCB, right?
I'm saying NCB Financial Group.
Okay, all right. So David actually eclipsed what I'm kind of interested in as well. So on the international market for me, I would go for Berkshire Hathaway for one. I think that Berkshire Hathaway is $160 billion right now is what we really need, and they have very very good companies for earnings power and inflation. To conquer that, I want to mention we're in an unprecedented time, and what you need is companies that are able to commensurate for inflation. These companies has to have economies of scale, switching costs, moats. You know what I'm talking about, the general consensus of what great companies are. I'm gonna, if Lance give me the time, I can go over those as well. But basically, you want to invest in companies that are able to retain its earning power throughout the inflationary period, throughout pricing power. So I said Berkshire Hathaway. I'm in love with Bank of America, economies of scale, cheaper cost, technological innovation. I'm also going along with Canadian Pacific Railroad. Inflation, goods are gonna still be moving, but retaining cash flow. How much I gone so far, Lance? Two, three? Three. All right, three so far. So I got Store on my list. Store is in my portfolio. And the STOR is a real estate holding trust that manages commercial, real estate, and residential. So they operate, they buy building and also they own a leasing contract to those companies. And we know that throughout inflation, real estate hold is priority. I'm holding to an ETF as well. ETF are the like emerging markets. So that would include Alibaba, Tencent, and all those companies. I believe that China has a very, very, very high perspective, irrespective of what's going on in the West, because they haven't really been impacted economically as much as we have with the coronavirus. So I think those would be my top picks.
And I have to comment and say respect to Ron, because when I heard Store Capital, I was like, yeah man, Ron is going for the guns, because I look in the Canadian market as well, and for me, I hold a Slate grocery REIT, because at the end of the day, people still have to eat. And the thing is, Slate is listed on the TSX, but earns all this capital from the US markets. And the thing is, this is a company that's actually was in heavy expansion mode in recent times, and it's a real estate investment trust paying US dollar dividends, but denominated in Canadian dollars for its stock price. So, trust me, great picks, man.
So David, if people want to get real estate trust on the Jamaican market, what are the best options? In your opinion?
No, so the market isn't as deep as it should be at the moment. So the only company that technically operates like a REIT is Kingston Properties Limited. They attempt to, try and pay out most of their cash or their adjustable or their funds from operations as dividends to shareholders. But, it's still not easy for them. But Kingston Properties is one of the only company at the moment you can say that operates like a REIT. You have Stanley Motor, which doesn't try to expand it to reach because it has that current 53 Happy Tree Road location, which they benefit from the continuous depreciation of Jamaican dollar since their rents are denominated in US dollars. And the other companies that you could say give you that real estate exposure, not even companies, but the real estate unit trusts and that are offered by different brokers. So the depth here in Jamaica is still relatively limited. And these are the companies like X Fund or even probably 130 or so on, is because, for example, X Fund only has cash. Some holdings in the Tactical Real Estate Fund, the unit trust one, and a hotel in Florida. 130 living is basically dependent on UA's liability, and also at the same time dependent on COVID really turning into a fad. 130 has basically been quote unquote suffering with those increasing receivables on their balance sheets. So I hope that can answer your question.
You list about 5 REITs or 6 right there, I guess. I really
No. I listed 2 companies acting like REITs, and listed 2 other companies which aren't real estate companies but aren't necessarily REITs in how they operate, and I listed real estate unit trusts offered by different brokers like JMB, Proven, VMF, and so on.
And for those who are viewing, REITs are real estate investment trust. So this is a way to get an exposure to the real estate market through the stock market. But I'm going to take two questions from the chat. I have Damore Brown. Do you think information is limited as it relates to investing in the Jamaican stock market? David, you want to answer that as a business writer?
To be honest, information disclosures can be much better, but it's not really just because we do have those minimum disclosure requirements here, or as you would say, that kind of pressure on companies to be doing disclosures that they should. So the reason why I say this is because in the US market, for example, when you have to file your 20Fs and your 10Ks and so on, those disclosures, say does company have mines, does company have liabilities here, there, whatever. The most we get that kind of disclosure in terms of information is at the IPO stage for a company, or at an APO or additional capital raise. Otherwise, investors are blind, to be honest, unless they go to the company's annual general meeting, or potentially somebody in the news publishes something pretty deep in terms of research. Investors don't get that true information that they should be receiving on companies. And that's just my straight up opinion, because it should not be the case whereby a person has to be going to, as you would say, a media briefing, or example, looking at a YouTube live stream to be properly afforded information for future context for a company's IPO. And there are different examples. You have companies here on the JSC that actually just publish their financials and no MD any attached or anything else. Just the company's mandatory top 10 shareholder list and financials. That's just it.
So you would think it is fairly limited to some extent there. But you can dig a bit deeper as an analyst. Another question, Ron, you have anything to add to that as it relates to information?
Well, Jamaica is an underdeveloped market with not much technical efficiency, so information is gonna be limited. Even the statistics that's given out by the central government and whatever, sometimes it's very slow. So yeah, because it's the nature of the market of our emerging economy. But I think we'll reach a point within 3 years that we'll really reach good information efficiency across the board. So
all right, so the second question I'm going to take, and guys, you can share the link on your social media platforms. Second question is, from Imran Borrell, how do you know which stock to buy and when to exit? Answer that. So for me, Imran, it goes based off my philosophy. So I am a growth investor, but also I do some value investing. But I look at the quality of the company, that's foremost. I look at the company itself. So you have to analyze the management, the earnings quality, the revenue is very important. And you look at all those factors. You look at the market, I look at if the company has a moat. Ron, what would you say is your strategy to buy and exit?
all right, so for Imran, correction, Imran is the CEO of Vasca. I'm employed to him as a co-founder and strategic advisor. That's correction for that. So for me, when it comes on to actually when to buy, when you say when to exit a stock and when to buy a stock?
Yes, correct.
So first and foremost, when there's many things you gotta look on when you invest in a stock. There's a multiple forces that you're gonna look at. You have to understand the business model, how the company is attaining revenue, how sustainable is that business model. So whether they're the cost leadership, differentiation, luxury goods, whatever, you have to understand the business model. Then you come to the underlying economics of the business. How much return on tangible assets has the company done so in 5 years? So you're returning on, you're looking at historical performance. You buy when you think it's cheap, depending on your intrinsic value calculation. when the underlying economics of the company has changed, you exit. But sometimes some great companies just doesn't give you the opportunity to really exit. So that's basically it.
And guys, I have a video on my channel. Tell 7 ways or reasons when to sell a stock. That's 7 reasons why you could sell a stock. So you could check that video out also. David, what's your take?
To be honest, you have to just understand or assess the company's current state and what is really supposed to be going on. Because, for example, yeah, the carry cement situation the other day, whereby persons didn't like what came out of the whole red situation, and stock went from like 120 to 70 in less than a month plus. So assessing that you probably need to exit and collect some gains, and set a potential re-entry point to potentially buy more units is one thing to consider. And the thing is, I think to consider, does the stock still fit your fundamentals or your personal philosophy? Because the company might still be growing, but does it fit your risk tolerance? Does it fit your specific ideals? Because the thing is it the business is growing and it's not growing in specific markets or areas that it should be targeting, then that's probably like an area of concern. At the end of the day, you selling doesn't necessarily mean that you don't have to buy back into a stock, because some common misconception I realize with some investors whereby they sell a stock and it's because they say it can't go any higher and it does go higher. So they are hesitant to buy back into the stock. And that's a relatively good concern sometimes. At the same time, you cannot necessarily ignore the reality of a company going up further and taking a new position. That's just it, because new information might come out to cause you to reassess and be like, it still has some value of re-entry.
So Alance, I think it will be the best for me right now to just break down some of the concepts that I look at when I'm looking to enter a company. So first and foremost,
Sure, go ahead.
I want a company that provide exceptional customer service. So a JetBlue customer service experience will be different from traveling and some other airlines or Southwest. It depends on how you experience. It's very tangible customer experience that you remember. You want a company, it depends on how you understand. Does the company have network effects? So network effects is when the value to its user increase in proportion to its use and the number of users using it. So we're talking about network effects. For example, we're talking about Facebook or YouTube creates network effect. For example, even Google Chrome have a data network effect. User contribute more data, products get smarter, more people use the service, and it's reinforcing a virtuous cycle. So you're looking for those confluences to understand the stock. You're looking for companies with marketplace effect, like an that enables competitive advantage over the long run. You're looking at Amazon, for example. They have a low cost structure. So low cost structure allow them to provide lower prices. Lower prices allow them to provide exceptional customer service. Exceptional customer service drives traffic and drive seller base, and the selection grows, and that's create a reinforcing cycle as well. So you're looking at those type of business. So what we have is that we have data network effects for modern companies. You have platform network effect and marketplace effect. So you end up creating a sustainable, durable competitive advantage that allows the company to scale. So you're looking, you really want to look for those companies that provide multiple confluences, but in a reinforcing manner. Even if you look at Uber, Uber have a liquidity network effect, they call it. And what that does, it provides supply of drivers. And the more drivers they have, the lower the wait time for you to get an Uber. And the more riders use the service. The more riders use the service provide higher earnings for potential drivers, and more drivers join the circle. So it's a reinforcing mechanism. Even Apple have a platform effect at economies of scale. The iOS system, for example, Lance, the iOS system enables customers to synchronize its Apple Store platform into an efficient ecosystem. For example, you have Apple Watch for health, you have Apple iCloud for data storage, and you have apps that layer innovation, and the system reinforces itself because it creates a premium brand and the premium band creates what we call Pavlovian effect or whatever you want to call it. So these are great companies and they create exceptional modes. The switching costs, for example, if you ever have a company, David was supposed to know of a company that they call ADP, right? David Rose or Slack. So if you look at switching costs for Slack or ADP, right? These companies create exceptional products. Slack, you have large, massive organization using Slack, and those are cost mode because the switching cost is very high to switch from Slack. Even ADP, you have massive companies using like Marriott, using none of those companies using ADP for payroll and taxes. Many companies provide some costs as well. You pay a membership fee. You don't want to leave Casco. You understand? And these great companies have cost advantages as well. Look at AWS. AWS, Amazon Web Service, power almost, what they say, 55% of the internet now. And they do not at scale. And because they have cost advantages, you have Walmart, I have a whole infrastructure for cost advantage. You have Geico, for example. Geico, normally how insurance companies work, for example, is they always have like members go out and sell the premium insurance membership. Geico doesn't do that. Geico goes straight to the customer, so they cut out the middleman and are able to create them a cheap float that Warren Buffett used to build Berkshire Hathaway because they have cost advantages. Even you have companies with cultural modes. Look on Coca-Cola. Coca-Cola reinvent Christmas with the Santa Claus dressed in red and white to facilitate Coca-Cola. Coca-Cola lift its cultural mode to a secular religion. Even if you look in Mexico, they have the broadest economies of scale. You have Nike that use availability as well, and they use association, Pavlovian effect, cultural reinforcement because of you wear Nike, you're cool. And all these multiple confluences play to create a cultural mode. Even Porsche, for example, Imran can tell a Porsche is a traditional brand of luxury, similar to Rolex. I don't want to stay too long on these, but there's other very important modes: customization and personal touch. You know, you have that with Pandora, variety at scale, as I mentioned, Apple, even reputation. You know, you have a Goldman Sachs and you have a Grace Kennedy, because you know Grace Kennedy food and tastes good. Geographical location and distribution. You have a Zara and that intertwined with their supply logistics, and you have patents for Disney, Mickey Mouse, the famous Mickey Mouse luxury brand. Those are all important, most like Louis V. Values and culture. If you read the book that Reed Hastings wrote about Netflix culture, this is why Netflix is an exceptional companies. And the most importantly, barriers to entry. NCB, for example, almost $1 trillion market cap that many persons don't really understand. So when you're looking at companies to invest in, you're really looking at companies with these. And most companies have more than one of these modes working interchangeably. And these create durable competitive advantages. These are the companies you want to invest in. I hope I didn't take up too long, Lance.
No, I have to say, whoa, you brought it across well.
Agreed there, and I was actually going to say that NCB is actually a $2 trillion balance sheet company. Assets.
Yes, $2 trillion. Yes, so that's right. There's a barrier to entry that many persons can compete with NCB efficiency and customer base. You know, NCB is actually a growth stock, how they learn innovation.
So David, I saw you did that. Look if there's another question first. So there's a question. What do you guys think? I'll just take one more question, then gonna ask David a specific question. What do you think on Derriman Trading Limited?
Why? I have passed up in the lands.
All right. So Derriman Trading Limited, that is it's a great company because I did actually put it in my top 5 growth stocks. So it's a company that recently expanded to the US market with 2 acquisitions, and it has high potential for growth. Revenue is growing very fast, and the potential for this company, profit is low, because what Derriman Trading does is they target the diaspora market in the US, which have a higher spending power than the Jamaican market. And they are expanding locally. So I think it's a great company based on the current PE ratio and the price. What's your take, Ruan, if you have one on Dermont Trading?
Lance, I hear you keep speaking about PE ratio. And I think Dermont Company is a really good company, exceptional management team, I should say. I haven't done much digging into value in the company because I'm finding opportunities elsewhere. I'm also concerned about inflation and where to put my money in this time. But PE ratio, most importantly, is a very distorted figure because if a company is growing like Diamond, PE ratio can be distorted by the operating cash flow being acquired other business, etc. If you understand what I'm saying, Lance.
Yeah,
So
but
it's
you have a peg ratio and your cash flow. Not just PE ratio I look at the growth potential as a company now overall.
yeah.
The market that it's targeting. For example, you expanded to the US market and you have plenty of opportunities in that market. So not just the PE ratio, but the business overall.
Yeah, the business. I think that is a very good managed. It's been managed properly. I've watched it's grow and I saw how they operate, but I haven't done much valuing the stock as going to the financials and all that. I just browsed through most of the financial report. So I don't have much to say on that.
All right, we'll pass it up for another time for further digging into that company because we can look deeper into that company for a deeper analysis. David, you recently did an article on proven investment. Recently, right?
Yeah, man. What is last week Friday?
Last week Friday. What are your thoughts on that company?
To be honest, they are doing what they need to do in terms of providing the shareholders, especially the larger ones, the comfort that they desire by providing the capital they want. But to be honest, I think that until I see the quote unquote tangible derivatives from the acquisition of Fidelity Bank and those acquisitions they've done this year, along with the rebranding, I have to stand back and just watch and see what is the next step for them. Because although all the activities and the numbers are good, bigger question is the growth. Because for me, with Proven, a stock I used to actually grow my US dollars in Jamaica, if I didn't know. So Proven and associated the US dollar market to the JSE. And key, no people I said the US dollar market in the JSE, have stocks on the JSE which are listed in the United States dollars, are stocks that you can actually capitalize on to consistently grow your capital by just buying and selling every week, quarter, whatever. So I like the company in terms of what they do. They continue to provide a tax-free high dividend yield to their shareholders, and at least 50% of net profits, or I should say adjusted net profits, while still growing value. But at the same time, as I said, I want to see more derivative value coming out of the businesses that they acquired this year, because it's good when you have net profits and so forth. But the thing is, the company needs to demonstrate to persons, or I should say investors, for them to get that interest again in the company, because this business was trading at 35 cents US just back in February 2020, call it $50 JMD. And now, interest is kind of weighing down. And so the business is not good. And I'm keenly saying is the business needs to demonstrate what they've done with the capital from the APO in the recent acquisitions. I can go to the financials if you want to go to them right now, but
so you're sharing your screen?
sure, I can share my screen and share the art and share Proven's financials. I can bring it up right now quickly.
All right.
And as I said, the business is attractive. You're talking about a company that set itself up in St. Lucia as an IBC. So there really isn't any tax for them to be really incurring if they don't have any income in St. Lucia. Then you're talking about a business that is actually benefiting from the synergies that they can pull from their reach across the Caribbean. So Proven is in Bahamas, they're in But Bahamas basically, because of heritage, they're in St. Lucia, Cayman, Jamaica, and they get indirect exposure through JMB and other companies. So I think it's really it. So let me just share my screen and bring up the financials of Proven so you can see what I'm speaking about. All right. Let me see what happens to my screen now. Taking a second to load. Can you see my screen now, Lance? You see my screen, Lance? You're muted, Lance.
Could you zoom in? Could you zoom in?
No, I just checking. Let's check to make sure you can hear me and you can see what I'm looking
I
at.
can see, but it's a bit, words are a bit small.
Let's go. Let me zoom in one more time. So as you can see, let me just put 350. So as you can see right here, Proven's, quarterly year-over-year net interest income improved, which is more than likely a function of the companies, benefiting from the current growth in fixed income areas. And interest expense in the group by a similar amount. So you can see the growth in net interest income, but they didn't similar gains as they did in the prior year when it comes to gains and securities trading, which is really coming back to, the extraordinary opportunity that came in 2020 to buy any stock that was really undervalued or sold down when COVID kicked in. The dividend income line has increased substantially again because different companies are paying their dividends again, which is benefiting their proprietary trading book. They are getting a substantial increase in their pension management income, which is really because of the growth just coming back from the increase in assets of pensions funds under management. Fees and commissions income is general. The net gross income from manufacturing is from the recent acquisition of RBS Manufacturing in Barbados. As I forgot to mention, you have the foreign exchange gains and the other income segment. As you can see, net revenues has basically surpassed 2021. And as you go down, expenses have gone up. But this is really a function of the acquisition and the consolidation of their subsidiaries, which would add additional expenses in that regard. And the preferential dividend has substantially gone up just because the companies earn a lot more and a bigger balance sheet, which is basically attributable to Proven Management Limited. But the share price of associate is really growing. And that's really because JMB Group Limited is doing what they need to do. Because Proven has two associates right now, which is JMB Group Limited and Access Financial Services Limited. Access is doing around a couple $100,000 US in net profit each quarter, while JMB is doing a couple million US dollars in net profit each period. JMB just did $3 million US with a net profit for the December quarter, and that didn't include such a financial company. So $3 billion. So you're talking about around $2 million, $3 million plus of associate profit. As you can see, the income for the entire group really kicked up in the final quarter, which is really because of the growth in JMB's positioning. And the thing is, as you realize over here, your net profit for the overall calendar year is not very far off from what they have done in the first 9 months. And for those wondering what I'm speaking about, let me just scroll onto the company list. So as you can see right here, you have Proven Wealth, Proven REIT, Proven Properties Limited, Asset Management Company Limited, International Financial Planning, Boston Bank in St. Lucia, International Financial Planning Cayman Limited, Proven Holding Limited, Roberts Heritage International Education Fund. For those who are wondering, Proven sold their stake in Dream Entertainment Limited back in July 2021. And this is the company's current off-balance funds under management versus their total assets right now.
So what I would say to you, David, sorry to interject.
Oh, go ahead, man.
Yeah. Proven is an exceptional run company. It has a fortress balance sheet for the type of balance sheet that is operating and the industries that is operating. A trailing 10% return on asset is a really good
An
thing to me.
equity. An
Uh,
equity.
yes, just looking at the return on assets. When you're valuing banks, you're looking at how much you're returning on the assets. Because they're gonna initially they know a bank holding company because they know going to proven bank. The company is well run. Trust me. If you see how they have developed their fortress balance sheet over the long run, as you say, you want to see how they operating with the Basel Bank, but
Now,
as you can see,
Bosley, I was talking about the 3 recent acquisitions they did. So they got
mm,
Proven Bank in Cayman, they got Roberts Manufacturing in Barbados, and they now have Proven Bank in Cayman. So I'm not saying that the company isn't good enough. I'm not saying that. What I'm saying is I want to see them demonstrate further value from these acquisitions again. Because I'm not
okay.
saying, because the thing is, you're talking about the companies, Boston Bank has already said that, they're looking to contain their risk as interest rates go up. Proven Wealth, saw a slight dip in income because of higher expenses. So yeah, the core subsidiaries that, are driving the income growth or, the core business growth, they have to slow down a little bit. So I want to see how these acquisitions are going to basically reinvigorate the balance sheet and the growth of the company. Because to be honest, for Chris Williams to have done what he did through raising $20 million US in 2010, after the financial crisis, $20 million US wasn't easy. To go to more than $1 billion US in total assets in 2021, that's a significant achievement.
Yo, Chris, I want them icon I'm look up to. Yeah, how him grew proven is exceptional. Trust me.
No, and I said, I don't think you remember the Fidelity Bank or Proven Bank now at 350 million US worth of assets when they acquired it.
David, sorry to interject, but isn't it going to take time for those acquisitions to really actualize? So I think
not necessarily. So what I was speaking about was that, all right, they acquired Roberts Manufacturing back in June. They acquired Heritage back in October, and they acquired Proven Bank now in February 1 this month, right? So I'm saying that within the next year, I want to see how those acquisitions really feed into the synergy of the group, you understand? As I'm pointing out right now, Proven is basically a $1.1 billion, $1.1 billion $1.1 billion US dollar worth of asset company, and they are doing pretty well from what I'm saying.
Yeah, and I don't think if you see how Proven has manages assets, it's really managed assets that are independent companies when they acquire them because they operate them independently. I know when it's a synergy, I mean how they can work across the group. But
the thing is, they actually are doing a group integration right now, Rowan, between different companies.
Okay.
Yes. So guys, it's almost 8, so I promise to only do 1 hour. I don't know if Ruan, just one last question and then I'll just end the stream.
No, let's just 2 questions and we'll do some final thoughts and call it a day.
But the 2 last questions?
Yeah, 2 more questions because we've discussed a pretty good amount so far.
You want to take them? All right, let's take them then. All right, let's take those 2 questions and call it. So let's see. Javon Nicholson asks, what are your views on Massey and its future growth?
Let me just start by sharing my screen. But Massey is the greatest Canadian of the region, to be honest. Because Great Canadian might have more quote-unquote territorial reach through their money services arm, but Massey has the real Caribbean reach that most Jamaican companies can dream of, to be honest. Because you're talking about a company that has, is actually the second highest company in terms of net profits as in the JSC at the moment. Then this company with market capitalization, you're talking, the thing that what more than 200 or I can't remember the billion worth of assets they have right now, but you're talking about going into Guyana, benefiting from the oil growth. You're talking about the growth in electric vehicles, which is a part of the motors and machine segment, and they're going to e-commerce reach right now, basically through their integrated retail portfolio. So Massey has a lot more legs left on it, and the Jamaican price, or for instance, reflect on the Jamaican stock market instead of the price, I wouldn't be too worried about that. Just because of the reality that it's a company that, it's actually not necessarily exposed to heavily exposed to Trinidad. It isn't necessarily concentrated really in Trinidad. They get about 6% of their earnings from Jamaica, and they're looking to actually expand that growth while Jamaica recovers. So,
David,
yeah.
what about the valuation of the issuance? That's the most important thing, the underwriting valuation. I've
Andrew?
always been, I don't want to get myself in any trouble,
No, be honest, man.
but these valuations that are coming out with these new issuance, you have to be very careful. You see, the price is not unlimited for a company based upon what you're saying, the bright future. If you pay too much for it, you can end up have to wait for a long time. You tie up capital opportunity cost. So I would say I don't have any criticism or anything. I would say be very wary of these new IPOs.
No, Master wasn't an IPO.
Yeah, the new public offering. I know what I'm saying.
I get what you're
Offering,
saying.
yes. Be very careful of these new offerings. The valuation, please. That's all I have to say. I don't want to get myself in trouble.
No. Trust me, I agree with you, Ron, because really and truly, persons are saying IPO, are going to buy. And, persons are buying up $100 worth of quote unquote into the IPO when the allocation is only 10,000 units, plus probably 2% per rata. So I agree with you. And,
There's a reason why Warren Buffett doesn't buy IPOs. Because the underwriting and the different confluence and underwriting. I know everybody gonna say, "Yo, with that Jamaica, buy the IPO and flip it." But you remember what happened to Wiccan? Remember what happened to Wiccan?
Rowan, I don't really have a problem with IPO. What I have a problem is when this price blow out in the sky and everybody just keep jumping on it without doing any research. That's the main problem.
The due diligence. But I'm saying that I want you to, whenever time you find an IPO that's fairly valued, send it to me. I've never seen an IPO that's fairly valued. Underwriters always put up a price, and sometimes we thought less much mass is different, but some of these companies don't have much operating historical background for you to even put a value to it. So I'm just want to tell the new investors to be very careful.
All right, so we're going to take the last question, but we already answered this question already. Fesco, we say, what do you guys think about Fesco at this point? Will it continue to grow? Well, David gave his opinion and I gave my opinion. It's not a company that I would get into based on the valuation and where I see the value for the price, because it's not just about the company, about the value you are getting as an investor. And there's a difference between the value and the price. That's very important. But David might have a different opinion from me. David, what are your thoughts?
No, the thing is that Fesco's very nature, especially in a country where, there isn't a quote unquote push to, as you would say, greater public transportation desires, is going to obviously grow. No, I'm not saying this Fesco, in my opinion, is going to grow in order to, as Ryan would say, the way that a company should grow, especially in a country where they're heavily exposed to Jamaica. By every industry, they're going to grow because right now, oil prices are going up by more than 50% in the last year. Fesco's revenue went up, I think, about what? Almost 100, about 70 or 100%, just based off of that increase in the growth of the price of fuel. And there's so more volumes. The reality is the price of oil and gas is going to impact their revenue growth, quote-unquote revenue growth, and their overall margins. And I think, so although they say, they're looking at new gas stations in the future to sell to, in this case, deal with gas stations versus, company owned, along with, LPG and water and, making it a destination location, Fesco's growth is really limited mainly to the core business, which is selling gas. And as you all know, it's a business that is really low margin. And as we go forward into electric vehicles, it's going to be interesting to see what Fesco does in that space, in terms of their own charging stations and deriving extra apparently term specifically, it's extraordinary value.
Okay, fair enough. I see Learn, Grow, Invest Club in the building. Shout out. Good club to learn and get some understanding and network. We won't take any more questions. We might have to do another live at another time. So guys, just stay tuned, subscribe, share the videos when they drop, and share the live stream. We'll see you. Thanks for David and Rowan for
Hold up,
passing through.
before you cut, Lance, I want to say to the persons watching right now, one mental model I want to leave you with today. Mr. Market. Learn about what Mr. Market is and how you should allow Mr. Market to serve you. All right? All right. Thanks for watching.
All right. So thanks for all who tune in to watch. And thanks for Rowan and David for passing by, two young, brilliant investors who are they have great potential for the future and they're doing things. Trust me. These guys are great. So good night. Stay tuned.